As the head of thematic investing at BlackRock, I really spend a lot of my time thinking about the future and some of the disruptive changes that are impacting the world and society and the economy and our portfolios around us. Oftentimes, this is about disruptive technologies. Oftentimes, it's about societal changes. But what we found with blockchain and digital assets is that in some ways, this is one of the fastest growing technologies we've seen in the last few years. On the right-hand side of the chart, you can see our adoption curve. This is just looking at how quickly certain assets are adopted by a society. And you can see that blockchain and digital assets are being adopted faster than major revolutions before it, whether that's the internet or whether that's cell phones. And there's a couple of reasons for this. The first reason is just we're living in a more digital economy than ever before. If we're consuming things online, streaming videos, playing video games, buying digital content, it makes sense to have digitally native assets to conduct those transactions, particularly when there's... Secondly, and importantly, in a year like this year, where over half the world's population is voting for new leadership, not just the elections in the United States, in Mexico, in India, and the European Union, we're seeing more geopolitical risk than before, and in fact, declining trust in institutions, whether that's trust in government institutions for maintaining peace and order, whether that's trust in central banks in terms of keeping inflation under control. More distrust has exacerbated the need for a global monetary alternative. The third we're seeing is demographic changes, the rise of the millennial and Gen Z generation. Millennials, at least in the United States, are set to inherit trillions of dollars, are entering peak earnings years in their work, and are increasingly playing an important role in the economy. And millennials are very different from previous generations because we, were the first generation to be digitally native, growing up with the internet, growing up with computers. We understand digital better than previous generations, and that means we're more likely to adopt digital currencies. And then finally, what I think has been really important to BlackRock in our journey in the digital asset space has been the maturing of infrastructure in digital assets. We've seen billions of dollars move in venture capital and private equity into digital assets to fund incredible innovation in blockchain. We've seen the regulatory environment evolve to get more constructive around digital assets and how people can buy them. We've seen extremely talented people leave traditional finance to go into DeFi to help lead some of these innovations. And all of this infrastructure has really matured over the last 5 years. So between all of these tailwinds, it's really creating the opportunity for digital assets to gain broader adoption across more investors around the world. With that being said, we're in the early days. 2.9 trillion, it changes every day. Maybe it's slightly higher or slightly lower since we made this slide. But we could have focused thus far our efforts on 2 digital assets, the 2 largest. We feel that between these 2 assets, which represent about 75% of the market cap of the digital asset space, and have some of the most liquidity in the digital asset space, that we can really start to make headway in terms of bringing out accessible vehicles to more investors. Now, what I'm going to talk about a little bit with all of you over the next several minutes is a little bit about how we talk about these assets with our clients. I recognize this audience is a little more digital asset savvy. All of you have maybe started your journey earlier than others, but I want to kind of pull back the curtain a little bit in terms of how we think about digital assets and the types of conversations we're having with investors in the United States and Brazil and beyond about the role that these assets can play in a portfolio. Now, the first thing that we've recognized in our conversations with clients is often when people are new to digital assets, they just think about it all as one thing. I've got my traditional assets over here, my stocks and bonds, and then these things called digital assets over here. And they haven't really made the distinction between digital assets, that there could be a difference between Bitcoin and that there's differences with Ethereum that don't make them all the same. The way we like to talk about Bitcoin is it is a global monetary alternative. That when we see increasing amounts of geopolitical risk, when we see inflation and monetary risk, when we see that there's more desire for a global monetary alternative, that Bitcoin benefits from that use case, the need for something besides existing fiat currencies or gold or treasuries. So on one hand, you have something that looks a little more like a commodity with Bitcoin, a little more like gold, a little bit more of an alternative to stocks and bonds. Now, the other conversation we have with clients is not just about education for the assets themselves, but the reason why professional investors should care about digital assets. It's not just about the returns or how it fits in a portfolio or the diversification. It's also about how can you be a better financial professional to your clients. What we found is that there's hundreds of millions of people that are investing in these digital assets, but they're holding it away from their financial professionals. That these individuals are buying assets, holding it onto it themselves, and they're not allowing financial professionals to help manage it alongside stocks and bonds, to help them understand the tax consequences of these assets, to understand estate planning or charitable giving, all the things that financial professionals can provide. They hadn't had the opportunity to do that for their clients because they didn't even know their clients were investing in these things. Over 80%, 4 out of 5 millennial millionaires in the United States own crypto. So if you're a financial advisor and you're trying to get that next client of the future, you want to be able to offer your services to a millennial, a high-earning millennial, and you don't know how to talk about digital assets or talk about the value that you can provide as a financial professional with respect to crypto, it's going to be very hard to earn that trust and to earn that client. So again, it's not just about the return story or the technology story or the diversification story around digital assets. Drivers for financial professionals, it's also about how do you appeal to the next generation of investors and to provide your services to that client. So we spend a lot of our time in these conversations with financial professionals, really trying to peel things apart with Bitcoin to help them understand on their educational journey what these assets are and what they can do within a portfolio. And often these conversations really start with just basics around what is currency? What is the fiat currency that we use every day, the dollars, the reals around the world? And what are some of the shortcomings that create an opportunity for an asset like Bitcoin to exist? Currencies are a way to facilitate transactions, they're a store of value, and they're a unit of account. But what we found with fiat currencies is that they're not perfect. In fact, they're prone to inflation, which for many Americans we didn't really realize was a thing until a couple of years ago when inflation hit 9%, and suddenly a lot of American investors started wondering, what's the deal with inflation? How do I potentially protect against it? That it's very expensive to move money across borders and takes time, that the average remittance could be 5% to send money back home and take almost a week to occur. Again, for many Americans, maybe not something we spent a lot of time thinking about, but we see more money moving across borders to be able to facilitate remittances. That's a huge pain point. And then finally, the risk of seizure or censorship, that maybe the fiat currency that you own in your wallet or you have in your bank account maybe isn't entirely yours. And under certain authoritarian regimes, it could be confiscated. So, of course, with Bitcoin and digital assets, a lot of them exist to try to solve these challenges with fiat currencies or to provide an alternative to fiat currencies. We know that with Bitcoin having a fixed amount of units at 21 million, that because of its digital nature can cross across borders instantaneously with low cost, and that its decentralized nature really helps solve some of the centralized challenges you could have with authoritarianism or censorship. So we like to see this really as an alternative to fiat currencies. Now, the question we often get when we talk about Bitcoin as an alternative is, well, I could just put my money in US Treasuries, get some yield, I don't have to worry about inflation, it's going to kind of adjust. Why would this be better than just what I'm doing today? Or why don't I just buy gold? And of course, Bitcoin has some advantages versus these assets. If you look at the US dollar itself, and I was kind of joking, Americans didn't know about inflation until a couple of years ago, but if you zoom out and look at the longer picture, 110 years, you see that the dollar has lost 97% of its value. It hasn't been a great store of value, and yet around the world it is viewed as one of the biggest stores of value. And it's because the supply is unfixed. In strained economies where we want to build more liquidity, like around COVID, we can print a lot more dollars and start bringing inflation into the economy. So Bitcoin, with its fixed nature, can help solve that. With its decentralized governance, can help solve that. In fact, has many advantages over gold as well because of its totally fixed supply and because it can be a more efficient medium of exchange. Now, in many ways, these challenges don't seem to be going away. If you look at the political discourse in the United States today, there's very little mention of the growing debt load. We've seen debts expand in the United States. This is not just something in the United States alone. We see this around the world. This is being propelled by aging populations where we have to spend more money to support more of society, crumbling infrastructure where we have to rebuild physical and digital infrastructure and energy infrastructure around the world. So debt growth in the United States and around the world doesn't seem to be stopping. So if you believe in this need for a currency that can be a bit of a hedge against the risk of inflation, then that's not going to be going away anytime soon, even if interest rates start to come down a little bit in the United States. And of course, everything I've been saying thus far has been a very US-centric view of the world. If you take a step back and look at other countries over the last 20, 25 years, you see that this is not an American phenomenon. This is a global phenomenon, if not even more critical overseas, where you see even more inflation. So what does it mean if you add Bitcoin to a portfolio? Well, of course, I think one of the things we have to recognize is that this is a risky asset. If we look over the course of Bitcoin's history, in some years it has been the best performing asset versus other traditional assets like stocks and bonds and gold and commodities. But every 3 or 4 years, you see that it's also been the worst performing asset. You can have very high highs and very low lows in Bitcoin. And this is important for people to understand because I think a lot of investors, as they look to Bitcoin, only focus on one or the other. They either see the phenomenal returns or they see the headlines of the major sell-offs, and they don't realize that there's a bigger picture here of how Bitcoin has performed over certain environments. Another way of looking at this is through the cumulative return of Bitcoin. We can see that it's obviously grown significantly over the last 15 years, but there's been periods of major drawdowns. Drawdowns more than 50% have occurred 4 times. Bitcoin has recovered from those drawdowns, but for investors that are looking for stability or can't handle drawdowns, Bitcoin might not be the best asset for their portfolios. As we've seen more adoption of Bitcoin and we've seen the price increase over the last several years, this risky asset has continued to maintain its volatility, and you can see this on the left-hand chart, but volatility has started to come down. Its standard deviation is about 50 right now, which is significantly less than it was 5 years ago, but is still about 2.5 times higher than the S&P 500 or US stocks. So again, for investors in this nascent asset, they have to understand the risks, the ups and the downs, the drawdowns of Bitcoin, the volatility and the trend. We would expect if we see more adoption of Bitcoin, which we believe will happen, that volatility will continue to fall, but it'll continue to be a risky asset relative to things like stocks and bonds. And importantly, a big part of the use case for Bitcoin is not just about the return story or the volatility story, it's about the correlation story. That Bitcoin fundamentally behaves very differently from traditional asset classes. Whether you compare it to stocks, whether you compare it to gold, it looks very different because fundamentally the drivers of Bitcoin are very different than the drivers of stocks. To help your clients